Long-term wage incentive plans are group incentives, value added by manufacturer, increased value of sales. Group incentives. Group incentives are paid when jobs are interrelated and teamwork is important, and individuals' output depends on work of others. It engenders cooperation. Group pressure reduces work evasion. Group output levels are more stable than individual output levels. Group incentives facilitate on the job training. It is in the interest of the group to train newcomers. Group incentives are calculated on the following basis. A standard output. A standard output is defined for the group. When the group exceeds the output, a bonus is paid. Value added by manufacturer. Standard cost is worked out for production, which includes man hours, machine hours, material cost, waste, etc. If the group achieves a lower standard cost by saving material, waste, machine hours, etc., a percentage of the savings is paid as incentive. Increased value of sales. The increased value of sale due to higher production levels is a basis for determining group incentive. The important group incentive plans are profit sharing schemes and the Scanlon plan. Profit sharing. Profit sharing is the stepping stone to industrial democracy. The features of profit sharing are a voluntary agreement based on joint consultations between employer and employees, payment in the form of cash, stock, and a bonus above standard remuneration. Employees need to satisfy requirements such as tenure or some other condition of service. Profit sharing agreement is binding on employers. Profit sharing amount is distributed among participants as per an agreed formula. The amount to be distributed is based on profit. Proportion of profit to be distributed is agreed in advance. Profit sharing is different from profit sharing bonus. The points of difference are: in case of profit sharing, employees negotiate on equal footing with the employer. The share of profit is agreed in advance. It is a progressive step undertaken voluntarily by the employer. In case of profit sharing bonus, conventional employer-employee relations are maintained. A percentage of wages paid as bonus is not truly based on actual profits. It is based on negotiations with employees. The spirit behind profit sharing. The creation of a mental climate in which a strong sense has to grow that the business is the business of all, since it is the joint effort of the workers and the management, and since the one cannot carry on a business without the help of the other. The main characteristics of labor remuneration in the form of profit sharing are: share of profit payable after accounts are finalized. The payment depends on profits, hence it is uncertain. Payment is not based on individual work. The payment is not directly in recognition of individual efficiency. Types of profit sharing. Actual payment made on finalization of accounts or given in the form of company stock. Credited to employee's account to be paid on retirement, death, disability, severance, or withdrawal under some provisions. A combination of the above. Objectives of profit sharing. These are industrial harmony, waste elimination, sense of partnership, attracting good employees, encouraging thrift, larger output, employee security, social justice. Forms of profit sharing: unit basis. Profits of the particular undertaking as a whole are considered. Department basis. Departments within a company have separate profit sharing schemes when profits made by each department can be ascertained independently. Individual basis. Efforts of an individual worker at achieving profits are considered. Requisites for profit sharing: the profitability of the industrial unit. The unit should be profitable for the arrangement to be meaningful. Computation of surplus profit. Proper accounting norms should be followed. Losses should be deducted from subsequent year's profits for computation purposes. Fair return on capital. Fair return on capital investment should be allowed while computing profitability. The Scanlon Plan, developed in 1937 by Joseph Scanlon of Massachusetts Institute of Technology. The basic features are financial incentives aimed at cost cutting and thereby increasing efficiency, a network of screening committees set up to evaluate cost cutting suggestions. Essentially, it is a suggestion system and assumes that efficiency requires company-wide or plant-wide cooperation. When a suggestion is implemented, all employees share 75% of the savings for the first year. The conditions in which the Scanlon Plan is likely to be successful are as follows. The number of workers in the plant should be less than 1,000. Stable product lines and cost. Good supervision and healthy labor relations. Strong commitment to plan on the part of the management. Prevalent systems in India are as follows. Piece rate schemes are followed in engineering industries. In iron, steel, chemical industries, piece rate schemes are not popular. Production bonus. Bonus is paid for production in excess of standards. Group incentives are paid in engineering and chemical industries. Individual incentives are paid in textile industry. Incentive payments form a very low percentage of total wages.